Thank you everybody for joining. Today we're going to talk about some information that's, relevant to nonprofit organizations, to those who like to support nonprofit organizations, and specifically about some of the tax benefits that are available to potential donors and some of the planned giving that we can do. And before we get into some of that, we have someone very special who is presenting with us today, and I want to introduce her. Anaid Braki has been in the nonprofit space for many decades. She has, and not too many decades, right? but she has a lot of experience in that space. In 2003, Anaid left a high-paying career path in structured finance. She started her career over in the nonprofit sector. She made this financial sacrifice because she wanted to give disadvantaged kids like herself the best chance at future success. And over the next 20 years, she applied her skills and abilities to solving some of our nation's biggest problems affecting kids, including hunger, homelessness, and healthcare access. And so her heart is definitely in the nonprofit space. For the first decade, she worked in the charitable giving side, and she led multi-million-dollar grant-making programs on behalf of different types of foundations, including private foundations, family foundations, and community foundations. And then, wanting to get closer to the action, she made another unusual career choice and spent the last 10 years from now, right, over the last 10 years, as the CEO for a public charity working on solving hunger in Southern California and beyond. And today she applies her deep understanding of philanthropy and social issues to her work as a charitable impact advisor. We work very closely with her, and we're very excited to have her as part of the team. She provides guidance and support to help donors, foundations, and charities to achieve their goals. And she is going to start us off. So Anaid, thank you so much for taking some time with us today. Not only do we have a few people on, but we're also recording this so that we can share it with others. And this is December. This is the month to give, right? We have a lot of people who are in the holiday spirits, and this is the time that I remember. I just want to share a quick story because a close friend of mine who's very he's a high net worth individual and very influential in his community, and he had one of his children pass away, just like my wife and I did, and they were heartbroken. And what they decided to do because of that, right? They came to the holiday time when they had lost their child, and they just couldn't bear going through the holidays like they normally did, right? So he passed away around Christmas time. Christmas time came around, and they were just heartbroken. They didn't even want to celebrate Christmas, and they were trying to decide what do they do instead. And so what they realized was that there's a lot of people that are homeless and hungry out there, and so they did a drive basically to get food and get clothing to give to the homeless. And they did that for the first time that year on their own. They just went and bought food and clothes, and they gave it away, and it did something for them. It warmed their heart, and it gave them meaning again. And they decided to do that over and over again over the years. They established a foundation, and they've done that for many years. In fact, I participated 3 years in what they did as part of the project, and we had hundreds of people go out to LA and just hand out all this stuff to thousands of homeless people. And that was one of the things that brought meaning to them. And so this time of the holidays is just one of those times I feel like it's the season of giving. So Anaid, thank you so much for being here. I'm going to pass it to you.
Thank you so much, Glenn. Thanks for the invitation to be here, and I'm delighted. I love working with Glenn and IntraVivos to help people do well financially and to do good at the same time. So I am going to talk a little bit about the philanthropic services that we provide at IntraVivos for donors, businesses, foundations, and public charities. On the philanthropy side, IntraVivos helps individuals and families and businesses to navigate the complex world of legacy planning and charitable giving. When planned giving makes sense as part of somebody's estate plan, then I can help them with identifying their charitable passions and figuring out how to turn that passion into a plan of action, and how to know when your charitable giving is having the impact that you want. I can help to research issues for clients as they're deciding what their focus areas in charitable giving might be. With my background, I'm able to help really identify the linchpins, right, for some of these problems, and to dig into that and sort of illuminate a clear path, and to make their giving simple. On the public charity side, InterVivos guides nonprofit agencies as well, and we help with strategic planning, operational planning, and really anything to help them achieve and measure their internal and external goals. So their program goals, their fundraising goals, board development, that kind of thing. And I think, I just mentioned fundraising, and I think one of the most important things that we do is to help nonprofit leaders and boards of directors to assess their organization's financial stability. And in addition to assessing their financial stability, we can help offer some services to boost that. And I think one of the most exciting pieces, and why I'm working with Glenn, is because there is an incredible opportunity for nonprofit organizations to increase their annual income through planned giving. So Glenn will talk about what planned giving is and the intricacies, and how different strategies that people might follow for to minimize tax burdens and that kind of thing. But when they, he will talk about how you can minimize your tax burdens and leave a legacy, and change the world in the way that you would like to. So I recently read that only 1% of nonprofits are taking advantage of planned giving or offering planned giving to their donors. And as one of the 99% of nonprofit leaders that didn't have a planned giving department or person, or even offering any of these pathways for my donors, I can tell you what some of the huge barriers are, and why this is such an incredible opportunity, especially with the huge transfer of wealth that's happening. So number one, capacity. When you run a small or medium-sized organization, you do not have the capacity on your fundraising team to offer planned giving strategies, right? It's complicated. It needs to have a consistency, et cetera. And what happens as a result of that, because these smaller and mid-sized agencies can't offer planned giving, all these planned gifts go to the big organizations. And so the smaller organizations, continue to struggle year after year to raise enough money. Awareness is the other big, the big challenge that InterVivos is trying to close the gap on. Even though I worked in the foundation world and knew what planned giving was, I still only thought about it in terms of estate planning and end of life planning. But there is a whole other world, right? People are selling businesses, selling homes, doing financial transactions that result in these huge tax burdens. And that happens at any age, right? 30s, 40s, 50s, 60s, before necessarily retirement, before these last, the last will and testament and that kind of thing. And so I think that awareness piece is something we're hoping to overcome. And then the expertise, again, I knew what planned giving was, sort of, but I really didn't know where to start, and I was too busy to find out. So I think that what we're offering through InterVivos with planned giving and charitable advising together is really special. So for nonprofits, we can help you offer planned giving opportunities to your donors. We can operate as a back end, as the kind of behind the scenes experts to guide you, and to provide material for that is to provide material about plan giving options that you can offer your donors, and we can tailor that to your audiences. We can tailor it to your organization, it will look just like your own communications. So that's just one example of how we can work with nonprofits to help improve their sustainability, take advantage of plan giving, take advantage of this huge transfer of wealth that's coming. And really, I think, create the kind of change that all of us want to see in this world. So with that, I am going to pass it back over to Glenn to tell you some of the specifics and exciting strategies.
All right, thank you. Well, for those of you who don't know me, I'm Glenn Wagstaff. I'm the managing partner at InterVivos. We've been recognized as the largest and the best estate planning law firm in the United States. We have 51 international awards. We do everything from estate planning, simple wills and trusts, to asset protection planning, business planning, legacy planning, and in this case, charitable planning. And we do a lot of charitable planning with individuals who are looking for tax write-offs to be able to minimize their tax burden. But we also do a lot of work with nonprofit organizations. So I've sat on a variety of boards with different organizations, and we've worked very closely with organizations like USA Wrestling Utah, several veterans organizations. We actually have a very close relationship with Make-A-Wish Foundation. And the reason that we work very closely with nonprofits is because tax planning and charitable giving go hand in hand. They're two sides of the same coin. And in fact, there are more social programs and more support that's given to the communities across the United States that comes from private organizations, nonprofits, than from the government. So the government is highly incentivized to promote private, nonprofit ventures, because it relieves the government of having to take care of all of those needs by itself, right? And we're a nation of givers. Like if you go back to the foundations of the United States, there's a rich cultural history of people helping people, and that's the basis for foundations, and it's also the basis for nonprofit organizations within this country, right? And so when you give to a 501c3 organization, you get a tax deduction that helps to offset your taxes. Now, a lot of times organizations, just like Anaid was saying, organizations are unaware of the planned giving that they could be tapping into. And so many organizations focus only on immediate gifts, immediate donations. So you have an event and you say, hey, we're accepting donations, please help autistic children in Utah or Florida or wherever you are, right? We're doing an event. Please help the cause and give today, right? But what if somebody wants to give tomorrow? Then what? So some organizations have adopted programs where they say, well, yeah, we'll put you on a program where you can give every month or every year, right? And that works. That's a form of planned giving. But another form of planned giving is, what if somebody is selling a property? Just an example. They're selling a property and they're going to have $1 million of capital gains. And from that capital gains, they're going to have to pay, let's say they're in the state of California or New York, where there's ridiculous taxes, right? So let's say they're going to pay $400,000 in taxes because they sold something this year. And they don't want to pay those taxes, but they say, I'd rather give it to the homeless than give it to the government. Or I'd rather give it to a nonprofit than give it to the government. I'd rather give it to sick kids than give it to the government. Why not take advantage of that? What if we could help them to avoid those taxes and to be able to have their money go to a good place to help people and help the community and enhance their standard of living simply by structuring the right structures in place? That's what planned giving is all about. So there's three aspects of planned giving that we work with regularly that we can bring to the table for organizations. And most of the time, organizations have never even heard of them. So, for example, if I say charitable gifts of real estate, how many organizations are aware that you could receive real estate as donations? And they would say, well, what would we do with real estate? You sell it and you get the money, right? Nothing wrong with that. But if you sell it as an organization and get the money, then there are tax benefits that you get to avoid the taxes, whereas the donor would have to pay those taxes. So we're tied into an organization that makes that process easy for you. If you want to accept charitable gifts of real estate, we can essentially have a donor donate a property and you don't even have to touch it. You will get the cash as an organization and the donor will get the deductions. And we do the planning in the middle so that it makes all the sense in the world. See, if we sit down with somebody and we're going to save them $400,000 simply by putting things in place, maybe they spend, $10,000, $20,000 doing the planning. That's better than paying $400,000 to the IRS. And what people are looking for today is not just giving the money and then it's out of sight, out of mind. But what if we could give them an experience so that when they give that gift, all of a sudden your organization has another $400,000 that you could do a lot with. You could help a lot of people or a lot of causes with. But what if that person's heart was warmed to the point where they say, I want to do this again? And they do it every year, or they do it every few years, or they decide that they want to become more involved and be a volunteer. There's so many ripples that happen when planned giving is done properly. So I'm going to give you a few examples of some of the ways that we help with planned giving. And I'm sharing this because hopefully this helps to open your mind. In the nonprofit sector, a lot of times we're not aware of what we are missing out on, right? And so we want to open up the opportunities for you because we can help with fundraising. We can help with tying you closer to your donor base and help to bring in more money for the organization. And if it's done properly, not only does it enhance your reputation with your existing connections in the community, but it will actually be the lightning rod that will bring you more donors in the future. And I'll give you an example of that in just a second. So the three things that we do planning around very frequently is number one, capital gains planning when somebody sells property or businesses or assets that are highly appreciated, right? So when somebody has a property that they sell, they have to pay or they have to realize capital gains taxes. But there are strategies that we can minimize those taxes or we can avoid part of those taxes by using charitable deductions. So, for example, we use a common structure. It's called a charitable remainder trust. We use another structure that's called a charitable lead trust. And then often we will use what are called private foundations, right? And there are other structures like charitable LLCs. There are other structures like charitable annuities. There are other structures like charitable gifts of real estate. We can use all of these structures. But the point is, when we sit down with a donor that has sold a property and they have a lot of capital gains, or they're going to be selling a property where they're going to have a lot of capital gains, these strategies help to save them tremendous amounts of taxes. And because of that, it opens their listening to giving, right? Because they might not decide to give $400,000 just out of the goodness of their heart. But if it's going to save them $400,000 or $1 million in taxes, why wouldn't they, right? And so once we open up their listening, then we ask them what is important to them. And a lot of donors don't know where they want to give yet, right? So when we ask them, okay, well, we're going to set up this charitable trust. And by the way, some of these structures, like a charitable lead trust, require annual gifts to a 501c3 public charity. So every year they're going to be sending money somewhere. And then we ask them, what charity would you like to name? And they say, I don't know. I haven't really been involved with any. I guess I could leave some for the Catholic Church. We don't really go to church, but maybe I'll leave some there. You see how this goes? what if they knew that you had a plan giving program? What if they knew that working with your plan giving program, they would get access to very competent professionals to assist them at a discount? And what if by doing so, they had you top of mind so that when we ask them where would you like to give, they say, well, I really believe in solving the hunger crisis, and I want to give it to the the food bank, or I want to give it to whatever organization you're working with, right? Because they already have it top of mind. So that's part of the power of having a plan giving department. So let me give you an example of how some of these structures work, right? Because we have structures like charitable annuities or charitable lead trusts that will give a certain amount every single year to the organization. So if somebody sets this up for the next 20 years, you're going to be getting a payment every single year because that's how the structure was established. Now, if you knew that you were bringing in $100,000 for your organization every year for the next 20 years, what could you do with that? I mean, that can make all the difference in the world, right? Especially if it's consistent for a 20-year span. Now you can start hiring people. Now you could open up new programs. Now, I mean, there's so many things that you could do as an organization. But there are other ways that people can give. So for example, if somebody wants to leave a gift after they pass away, well, I know that sometimes we say, well, who knows when that would happen? That could be, 5 years from now, 10 years from now, 20 years from now. What do we care if it's, a donation that happens like 30 years from now? I'll tell you why. Because there's an institution called Harvard University, and Harvard University has an endowment fund. Harvard's endowment fund is one of the largest in the world. And when they provide scholarships for their students, it doesn't shrink their endowment. Does that even make sense? They provide scholarships. They could literally give scholarships to every student, and their endowment wouldn't shrink. They're just giving with the interest. What if your organization could establish an endowment fund? And the way you do it is because one of your donors who wanted to maybe save some money in taxes established something like a charitable remainder trust where they sold a property or they sold a business or they sold something, and they were going to have $20 million come in that they would have to pay taxes on. But instead, they established this charitable remainder trust so that they could avoid all the tax up front. They receive an income stream for the rest of their life, and they're living on those proceeds, right? And then at the end of their life, when they pass away, that $20 million comes to your organization. And the family that they left behind, right? They're not going to miss out on it either, because we established a life insurance policy along with that charitable remainder trust to replace the value for their estate, for their family. What if we could do that? Then that $20 million comes in, and all of a sudden that's the basis for your endowment fund. Now, as an organization, you have a large amount to be able to work with that was a windfall, that was unexpected, that changes the course of your organization forever. That's what you're missing out on by not having a proper plan giving department. So when Anaid says that we can assist with a plan giving department, what we're doing is we're back officing for you, and we don't even have to use our firm or our branding. We can, for example, when we go to the USA Wrestling, fundraisers, they have a booth for us, and the booth is for USA Wrestling Planned Giving. It's not for Intervivos, the law firm, right? It's not for Empowered, the marketing company, right? It's not for our brokerage. It's not for anything else. It's for USA Wrestling Planned Giving. And when people come and they ask questions, of course, I'm an attorney, and when I'm there, I answer questions and everything, but I'm doing it on behalf of the organization. So we provide free answers. We can be able to support and assist with whatever their needs are. And then if they choose to engage with us, we give them preferred discounted pricing to be able to help with their planning. But the other thing is that if they're going to engage in planned giving, we're going to recommend that they work with your organization for that money to flow to the organization. So these sort of structures can be anything from testamentary gifts, where somebody passes away, and we've had lots of clients, we do a few thousand estate plans every year. We've had lots of clients that come in and they don't have kids. They don't have relatives. They don't have anybody who would be a natural heir to their estate. And maybe sometimes they do have relatives that they don't want to leave them the money, right? They don't want it to go to somebody specific. Instead, they would rather have it go to charity. Well, if somebody passes away, and I'm just going to give you another example. I have a great aunt and a great uncle. They both passed away at this point, and they were great, but they were also my great aunt and great uncle, right? So they didn't have any children, never had any children, and they earned a modest income, to be honest. Like, I mean, maybe 70,000 a year each, right? And so it wasn't like anything super impressive. But what they wanted to do, what they were passionate about, was leaving money for their church. So when they passed away, they had planned over years how they were going to leave a legacy when they were gone. So every single time that they would save up enough money where they could afford it, they would put that money into an annuity, and that annuity would pay out a distribution every single year. And that money would pay for a life insurance policy, and they'd get the biggest life insurance policy that they could afford. Now, this is, again, middle income, fairly modest sort of income. They never earned the point where they could, save up millions of dollars. But when they passed away, they left for their church $15 million because they leveraged life insurance, right? So if it's important to you, there are ways to be able to leave a very large legacy. I talk to my clients a lot of times about legacy planning, and we talk about their children, their grandchildren, and we talk about, well, if you want to leave a legacy of money, that's really easy, because you can go leverage, life insurance or other things like that and leave large amounts, but it's not enough to just leave the money. You need to leave the purpose behind the money. And if you leave the purpose properly, then it won't just be wasted. It won't just disappear, right? And it's the same thing with our organizations. So when we leave these sort of gifts, the idea is that we want to leave it to organizations that are going to understand the purpose of the gift, but also that we can have some sort of involvement in the cause. So for example, I established my private foundation a couple of years ago. And we use it for tax planning. But every year I have my kids decide on what kind of project we want to do in our foundation. So 2 years ago, we went with the Make-A-Wish Foundation, and they identified one of the wish children so that we could be involved with their wish announcement. And the way that this wish announcement works is that, the wish kids will choose what they want their wish to be, right? They get to choose if they want to be anyone for a day, right? If they want to meet anyone, if they want to go anywhere, or if they want to have anything. They write down 3 wishes, and then they get to announce to their family when that wish is going to be granted, which one they wanted, right? And in this case, they wanted to go to Walt Disney World. And he was, I think, 9 years old. And, he has a potentially terminal illness, and he's struggling, right? But Make-A-Wish Foundation's there helping. And he loves superheroes. And so this is the information that we got from the Make-A-Wish Foundation. So then our family got the opportunity to put together the wish announcement ceremony for him. And what we did was we gave him a costume of Ant-Man. And then we had all of the kids, by the way, I have 5 kids in my family, and then I have 5 nieces, and then we had other cousins. And so there was 15 kids, and they all dressed up as different superheroes. And the game was that Loki, the villain, came out and told him that they had shrunk all of the superheroes, and only he, Ant-Man, was able to save them. So here we are at a mini golf course, and we have these little superhero toys that we tied up and we put on each of the golf course holes, right? And so he goes from hole to hole, and he goes and he saves each of the superheroes. And when he saves them, they come running out because each of the kids are dressed up as those superheroes. And then they join him on the golf course. And then they go at the very end. There's 15 of these kids that are standing out there, and they all fight Loki. And he had the time of his life. But the thing is that my kids also had the time of their lives. And because of that experience, we wanted to give more. We wanted to have those experiences again. We wanted to be able to put ourselves in a situation where we could donate more often. And how often are you connecting with your donors in that way to where they want to give as soon as they've given? That's the power of properly having a planned giving program. So when we set up these conversations, we don't just want to save them money on their taxes. We also want to help them to really connect with their why. What's their legacy? What's their purpose? What's the good that they want to do in the world? And we can embed that. We can inject it in their own private foundations. We can inject it in their own charitable structures. And then that is going to ripple to your organizations, because that's the way that these structures work, right? And so I think you can tell that Anaid is very passionate about this type of planning. We are also very passionate about this type of planning. And the reason is because we see the difference that it makes. And we are looking for organizations that we can connect closely with, that we can assist in reaching out to your donor bases to have strong connections with those individuals and those families, so that we can make their giving more meaningful to them. And that way it becomes sustainable to where they will give more often, more freely, and more money, right? And by doing that, your organizations will grow to the point where, hopefully you get to the point where you have an endowment fund and you can grow it and sustain what you're doing to better the world on a larger and larger scale. And this is how the world changes. So thank you for joining us today. One of the things that we wanted to share with everybody is, if you're interested in some of the things that we've talked about, there's 3 things that we can do to engage with you more directly, right? The first way is we have an ebook that we've written about exit planning. And this is specifically some of the strategies that we use for people who are going to be exiting from businesses, from properties, from other assets. We've even done this we had a client once that we did a charitable remainder trust to help them to avoid a lot of the tax exposure that they would have otherwise had. And they had a large oil drum. So, I mean, who knew, right? I didn't know that this was a thing, but they have a huge oil drum. And this oil drum started out as a $10,000 investment for them. When they sold it for $380,000. So there was significant amount of capital gains, right? We helped them to do a charitable remainder trust to avoid those capital gains. And then they chose, in their case, I think it was a hospital that they decided to leave the amount to when they pass away. So now a hospital is going to get $380,000 at the time that this individual passes. What did they do to earn that? Nothing. What do they have to do to maintain that? Nothing. What do they have to do to, they didn't have to do anything, right? So this is the power of planned giving. And because we established it and they already got the tax benefit, they can't back out of it. It's not like they just gave a promise, in 5 years, I'm going to give your organization $10,000. But how do you collect on that promise? You can't. There's lawsuits and established case law that say that you can't collect on it. However, in the case of these structures, you can, because the charitable remainder trust gives the tax deductions today. So they can't back out of it later because the IRS won't allow them to. When they pass away, it has to go to the charity that they've established, right? That they've chosen. And so these are the types of things that we can help put in place for your donor base. And when we sit down, it's not just about, okay, well, we're going to get you a tax deduction and then you're out the door and you never hear from us again, right? The idea is that we want to do a full financial analysis. Where are they at? How is this going to benefit them? How does it fit in with everything else that they've done? Does it make sense for their situation? And then once we put things in place, very often we're in communication with them every year to give them the information that they need for their CPA or for their tax professional to be able to do the filings on their structures, right? And what we'd like to do is we would like to connect with these individuals and your donor base, right? Whoever you're connected to in your communities, to be able to give them information about this type of planning regularly, right? Did you know that you could do this with your private foundation funds? Did you know that we have this new project that we're doing at the AICPS or whatever organization you're working with, right? Did you know that we now have this new center that we've opened, or we now have this new project, or now we're gonna have a mission trip to Africa, or whatever it is. So the more that you can establish a following with those potential donors or past donors that you're connected to, and we can provide value and we can connect with them, we can answer their questions, we can provide guidance, the more likely it is that when they have a need to give or they have a desire to give, that they're going to think of you. And that's where we want to be, is right in the middle, helping them to be able to think of you more frequently, right? So that's the second thing. If this is of interest, we would like to connect with your organization, and we will offer a complimentary service of back officing as your planned giving department. If there's interest in incorporating this to a fuller extent, we also have consulting options to help you to do that. If it's of interest to fundraise further, we can have those conversations. If it's of interest to have us sit down with a specific donor, we actually had somebody that recommended to us, that referred to us, a guy who had sold $1 billion company, billion with a B, right? And this $1 billion company, he owned the majority percentage of. So just imagine, at least 500,000 at least, right? And he was going to have taxes on that in the amount of 260 million that he was going to have to pay in taxes, some ridiculous amount. He sat down with Wells Fargo advisors. He sat down with Merrill Lynch. He sat down with, I forget what the third one was, 3 very established financial firms. And he sat down with his CPA, and everybody told him the same thing. You just have to pay the tax. You don't have any options, just pay the tax. At the end of the year, December 15th, he talks to his pastor at the church because he's thinking of giving some of the money to the church. And the pastor recommends him to us and says, there's some planned giving options that you might want to look at. So we sit down with this guy at the end of the year. We presented 3 options. All 3 of the options would have saved him over $150 million in taxes. And what was his first question? Why didn't these other guys tell me about it? Why didn't they, I sat down with 3 different tax planning teams. Why didn't they tell me about this? Why didn't I know this existed? And the answer has to be one of 3 things. They either didn't know enough, they didn't care enough, or they made more money by not telling him. Right? So when we sit down, we want to have your donor's best interests at heart. We also want to have the organization's best interests at heart. And we want to make a difference in this world. And there's so many people that need to save money on their taxes. There's so many people that want to give, and they will do it if we give them the right structures. And they won't do it if we don't. So we invite you, if you're interested, to sit down with us, have a conversation. Let's talk about how we can help your organization to bring in more funds. If you're interested in this ebook, reach out to whoever invited you and let them know, and we'll make sure that you get a copy. And then the third thing is, if you're interested in reviewing your own situation, maybe we have some donors on today that are interested in some of the planned giving solutions that we could bring to the table, or helping to establish your own private foundation. We can have those conversations as well. And because you came to this presentation, that would be complimentary for that analysis, right? We can sit down, make some recommendations. There's no cost, and let's see if we can help you to leave a legacy far beyond when you're gone, right? So with that, I'm just going to open it up for Anaid if you have any final thoughts, and then in these last few minutes, if anybody has any questions, you can put it here in the question and answer or in the chat. Anaid, what's on your mind?
What's on my mind is, again, I wish I would have met you while I was still running a nonprofit. And just, again, this huge transfer of wealth is happening, right? And this is the time. And estate planning has been just not part of people's, reality in the nonprofit sector. It's just not on people's radar. And so I think, you know, seeing estate planning and charitable giving come together in this way through our Intervivos approach, I think is so powerful. So powerful for helping organizations become more sustainable and get the funding that they need. So yes, I'm looking forward to working with more organizations, more individuals, and we are here to help you.
Awesome. I don't see any questions here in the chat or in the question and answer box. If you have a question, feel free to put it in here. We're going to wrap up right now. But whoever invited you today felt like this was information that might be valuable for you, for organizations that you care about, or possibly for people that you know, right? And so as you think about, you know, especially now in the, you know, at the end of the year, with the giving season that we're in, if you know anybody who could benefit from some of this type of planning to reduce their capital gains exposure or to reduce their income taxes, and by the way, most of these strategies can double dip, right? Because you actually will reduce your regular income first before you start reducing your capital gains income. And so you actually reduce your taxes more than if you were just planning around the sale of the home or the sale of the property or the sale of the business, right? You can reduce your income even more because your regular income bracket is going to be higher than your capital gains bracket. So we sat down with a client just the other day and we walked through this, and they said, yeah, but you know, we have a lot of business projects we want to do with that money. We don't just want to give it away. And I said, well, what kind of projects are you doing? And they said, well, we make movies. You make movies. That's a public good. That's entertainment, but it's also part of the arts. What kind of movies do you make? Right? And we could have the conversations about building something that is meaningful to them as part of their legacy while also saving money on taxes. We had another client that we sat down with that, you know, they're passionate, they high income earners, right? Husband has a very, you know, successful business, and wife, you know, does a lot of things on the side. But one of the things she does is she volunteers at the schools, and she's passionate about stage productions. So she helps with all the costumes and the stage design and all that stuff for community theater, right? And as we're sitting there talking about how they can save money on their taxes, I said, do you guys travel a lot? And they're like, well, yeah, we love travel. We go all over the place. We go to Europe, we go to, you know, India, we've been to all kinds of different places. And I said, do you get to write that off? And they're like, well, no, because it's personal travel, it's not business travel. And I said, how often when you travel, do you get ideas or costumes or material for the community theater projects that you do? All the time, every time. Of course, you know, when we go to Europe, yeah, we bring back all kinds of stuff for the theater. Bingo. Now we establish their private foundation. And because it's tied to the arts and what they're supporting and everything else, every time they travel, now their foundation gets to pay for that travel. So there are ways to be able to tie your personal needs, your own personal lifestyle into the charitable giving. And it takes being creative, and it takes, you know, thinking through these things. It's not just, you know, set it up and forget about it. It is a lifestyle choice, but it will enrich your lifestyle to be able to give meaningfully. We do it annually. It's something that's, you know, part of what we want to do as a family. And it's powerful. And I think, you know, there's a lot of people like that out there. So if that's you and you'd like to sit down and look at your situation, again, complimentary consultation, we'll sit down and have that conversation. Get with whoever invited you today and we can have that conversation. So thanks again for joining us today. We're going to end just a few minutes early. If you have any questions or anything that we didn't cover today, you can go ahead and reach out again to the person who invited you, or you can email us. You can find us, you know, on the website at intervivosplan.com. And we look forward to connecting with each of you soon.
Thanks, everyone.